What's up, you guys? Michael Elefante here, and today I want to talk with you a little bit about how COVID-19 or the coronavirus has affected the short-term rental market, both from just a bookings perspective. It's obviously, as everyone here watching is well aware, it has drastically impacted the travel industry and how it's impacted hosts who own and operate short-term rentals on sites such as Airbnb, and the longer term outlook for, as an investor. So if you guys have interest in maybe investing in a property and using it as a short-term rental or even as a long-term rental, how has the coronavirus impacted it today, and how will things change moving forward, and is it still a good time to invest in a short-term rental? So we'll get into that today. It's been long overdue, but I wanted to wait to talk about this topic to see how it personally affected myself and how it affected our unit and the new unit that we have that should be listed here shortly. And so we gave it about 3 months, and I have a lot of interesting data to share with you guys, and how much we lost due to cancellations and what Airbnb did, and they got in some heat as well. But before we do, if you guys get to the end of this video and you like it, please do hit the like button. It really helps me out. It helps with the YouTube algorithm to help promote this video. And please do subscribe below. I'm very grateful for everybody that has subscribed to the channel, but it really helps me promote and produce new content, and I really appreciate it. All the support I've gotten from friends and new people I've met along the way so far. With that being said, I wanted to talk about one unit in specific, which was our original unit here in East Nashville, Tennessee. It is a 4-bedroom, 3.5 bath, gorgeous new home. It was a new build and a development. They're all short-term rentals. Everyone's listed on Airbnb and VRBO, HomeAway, and other platforms as well. Has a giant rooftop and 2 additional patios, 2-car garage. It's a perfect spot for large groups, bachelorette parties to come in and enjoy a quieter area, and it's a quick Uber to downtown. So we had listed in December of 2019, and bookings started taking off right around the February time frame for the spring and the summer. And we were on track to have our best few months, obviously ever. We hadn't been listed that long, but exceeded our expectations, and we already had high expectations for the amount of revenue we were going to generate and how much income or cash flow we were going to see for the forthcoming months on the property itself. So just to give you guys an example, in March we were pretty much booked out. We were actually lower in price than what we typically are planning on being for the busy season, which is mid-spring to, again, mid-fall and everything in between. So in March alone, we had about $12,500 in bookings revenue. And that was going to bring us a cash flow of about $7,000 to $8,000 for the month. So that's a huge profit. Now, the coronavirus hit and started really affecting the United States travel right around mid-March. And right around March 13th, I think it was, Airbnb put out a statement to travelers without notifying us that they were going to override our cancellation policies. Again, for better or worse, I have personal feelings about their decision to do that, but we won't go into that today. But what they did is they overrode cancellation policies where, for example, if you have a strict cancellation policy, hosts would get about 50% of their money back as long as the cancellation is made. I think it was more than 7 days before check-in. So we had the remainder of March canceled. All of our larger, groups were canceled through April, May, and even some in early June as well. And we've had a few cancel later in July, and then one in August as well. And those were mainly due not for them to not want to travel, but they were coming for events or conferences that were ultimately canceled as well. So between March and June 3rd, we had $23,000 of cancellations. So that one stung big time. And then we had a few more $1,000s of cancellations again from bookings that were further out. Now, we did recoup some of this. Now, basically, we dropped our pricing significantly to try and attract longer term guests. We ended up having some folks who were in town for construction and someone who was enjoying time with family. They were graduating their son's graduation, but just wanted to have like a little private family gathering here in Nashville. So there has been, various different groups coming in, and most of them have been pretty good for the most part. And we've actually been very fortunate. Our goal was to just cover costs, and if we make a profit, maybe for a little bit a little bit of a net loss for the month in either March, April, May, June, then we're okay with that. We just want to remain about even, because remember, in real estate investing, Nashville's still a growing market, so we're making a lot through just appreciation in home value and the loan pay down. So right now, in the first 12 months, we're making between $5 and $550 a month in equity pay down. So if we're breaking even, we still have a solid investment longer term. Now, with those, about $23,000 in cancellations, that really stung. There's also an opportunity cost that comes with that, because we still had the majority of April, May, and June still available. And now in all of those months, we had already hit the amount of revenue we needed to exceed and make a positive cash flow for the month. So everything on top of what we were going to make in those months for additional bookings was going to be just icing on the cake. The opportunity cost for those 3 months, being April, May, and June alone, is probably estimated to be anywhere from $20,000 to $30,000 more dollars as well. So the net impact to us so far, not including July onward, is right around $50,000 to $55,000. So it's a major impact to us, and this is really just our main unit. We have another one again that we just closed on and we're getting ready to list, but I cannot imagine the struggle that some folks are facing if they're not able to get some longer term renters in there, maybe for longer stays for a lower price. If someone has 10, 15, 20 units, I could see how it's been a drastic struggle, and this has just hammered the travel industry. And if I'm traveling, I'm canceling too. The city's closed down or was closed down. It's already halfway through the reopening process at this point, which we're thankful for. But again, when the cities are all closed down and travel's limited, everyone just got hammered. Now, I actually have had a lot of folks reach out to me on Facebook, from the YouTube channel, on LinkedIn, and then folks that I've met around town who also do short-term rentals and invest in those properties. They're actually offloading properties. A couple people have asked me if I'd be interested in buying one of their properties, if I know other investors who are interested at this time, and then several other people. And I was talking with someone today who's a big time investor and home builder, and he has hundreds of properties, and they've taken more than half of their properties to long term for the next 6 to 12 months just to cover their costs in the meantime, because they're way over leveraged for short term renters, and it's just too hard to upkeep that when travel was so limited and with kind of the future being unknown. So they went ahead at the beginning and just offset some of that and tried to attract long term renters for, again, like a 6 to 12 month lease. So with that being said, there have been a mass wipeout, and it's going to continue happening for people who maybe were not cash heavy in the bank and cannot support, paying expenses or mortgage costs for 2 to 6 months in case they, really lack in bookings and cannot afford to keep up with the property. So to avoid foreclosure, they're going to ultimately try and sell the property. And so that's why I think personally, but from now until this time next year, is going to be a tremendous time for buyers, as long as you are good on cash in the bank and have some reserve funds and can maybe stomach a little bit of a cyclical or an interesting cycle in the next 6 to 12 months with COVID still kind of everyone figuring that out and people kind of easing back into the normalcy of things, or what will normalcy even look like. I think it's going to be a good time because there's going to be much less short-term rentals on the market right now. There's going to be a lot less Airbnb and VRBO listings out there. And with that being said, when travel picks back up, you're going to have less competition from hotels, because why would a group or a family or a couple want to cram into a hotel with hundreds or thousands of other guests when there's still kind of the unknown of COVID going around? They're going to want to have a private space in a private house or maybe a condo where they have private entry. Again, they don't have to talk or see anybody, and they have keyless entry. They can walk in, they can enjoy their time for either work or pleasure or whatever they're doing in that particular town or city, and then they can get out. And again, I think with the less competition from hotels and less short-term rentals listed on Airbnb and VRBO, now is going to be a great time again in the next 6 to 12 months to get in. So what I'm expecting is once travel picks back up and Nashville kind of returns to whatever the new normal is, I expect that to happen within the next 3 to 6 months and travel to really start booming again. And then as long as we get the vaccine and maybe the numbers continue to flatten or go down, hopefully next year's a little more normal, and all the major concerts and activities, not just in Nashville but other parts of the world, again, return to that some sense of normalcy, travel's going to pick back up again eventually. People are not going to avoid traveling. In my opinion, I think people are itching to travel and itching for an adventure because we've been cooped up for so long in this quarantine, right? So again, with that being said, I think now's a great time. What I'm expecting is there's going to be an influx in interest and in bookings, and there's going to be too much demand for not enough supply. So again, with that being said, you're going to be able to maybe charge more, your bookings are going to go up, your occupancy rate is going to go up, revenue is going to go up when, again, travel comes back to normal. So another thing to think about is mortgage rates are at all-time lows right now, I believe. And again, it's different when for a primary residence, I think the rates were creeping at 3 or below 3%, which is insane because think, 10 to 15, 20 years ago, they were 7 to 8 to 10% for a primary home loan. For an investment property or a secondary home loan, it may be a little bit higher, but there's still going to be good rates as long as you have a solid stream of income and you're able to work with your loan officer to lock you down with a good lender. But with that being said, it could be a good opportunity to get in while rates are low, and I think rates are going to stay low for the next 6 to 12 months until the economy really kind of returns back to normal. I know the economy has kind of come up from the dip, but I don't know if that's over. I think that is a little bit from speculation on the coronavirus vaccine and the flattening of the curve, some people getting back to work. If the market continues to go up, I don't know. I mean, we still have a major debt problem in the U.S. between consumers, businesses, national debt. So is that bubble going to burst or not? So who knows what's going to happen there. But again, while mortgage rates are low, it might be a good opportunity to get in and pick up on a property where if there's less competition from other buyers out there right now with everything going on. There's more people offloading properties for short-term rentals now than since inception of Airbnb probably. So they're going to be willing to probably drop their price a little bit, their asking price, in order to offload that property, because the longer they hold on to it without bookings, the more money they're going to lose. So again, it could be a great opportunity for you guys if you're interested. Maybe team up with 1 or 2 other people and put your funds together, and you guys can split the reward longer term. Again, we did another video of how to invest in real estate with little to no money. I'd encourage you guys to take a look at that video. But again, overall, I'm pretty disappointed with the way the last few months have gone, but it's totally understandable, and I'm not upset for travelers for canceling. Again, if I were in their shoes, I would have done the same thing. It has been tough for hosts out there with cancellations and Airbnb. Again, I won't get too far into that topic because it infuriates me a little bit, but they overrode cancellation policies and changed their extenuating circumstances policy without talking with hosts several times. So I've even had cancellations beyond the extenuating circumstances final date. And I looked back the next day after the cancellation happened, they canceled for free, and Airbnb had just extended in another 15 days at that point in time without notifying me. So there's been a pretty rocky road for Airbnb. But again, thinking in the bigger picture, I'm pretty optimistic about travel getting back to normal. Again, it may take 6 to 12 months, but as long as you can hang in there and at least break even, maybe drop your prices, attract longer term renters, maybe you can get whether it's week-long bookings, month, 2 month, 3 month, 6 month, folks that are just looking for a place to stay. Maybe they're in between home purchases or homes. I encourage you guys to figure out a way to kind of stay afloat, try to break even at least, because again, when travel returns, there's going to be a prime time to have a tremendous return on your investment. But that's it today, guys. I hope you liked the video. If you did, hit that like button below. Please do subscribe. It means a lot to me, and I hope to produce more content that's relevant to folks that are interested in real estate and interested in achieving financial freedom and interested in just growing long-term wealth that you can share with your family, share with others, with charitable organizations, and however you want to spend your time. I want that to be up to you. I don't want you to feel obligated and locked down to your 9-to-5 job your whole life. And again, if you like that job, like we've talked about in other videos on financial freedom, great. But how nice would it be if you can leverage investments in real estate and maybe the stock market or who knows what that can bring you some sort of cash flow or return on your money. Have your money work hard for you so you don't have to work hard your whole life. So thanks for watching, guys. We'll talk to you next week.